we'll look at VIX 75. We'll look at Boom 500. Then if ever you have any other pair that you want me to look at, I can as well look at it. So as we all know that we always start from the higher time frame, which is the daily time frame, right? In this case, it's the daily time frame. But if you go to your if you go to your, what do you call this, your MT5, whether on your phone or on your PC, you realize that you can actually go as far as the weekly. You can actually go even as far as the monthly. Uh, but this one is only ends on the daily. So what we want to see on the daily is a rough bias of what is going on. What is going on now, or what is going on, even what can happen even in the next days, even the next weeks. All that information is vital because it helps you to know certain trades, are they worth holding? Certain trades, are they even worth taking? So it helps you to identify all of that. So um volatility 75, looking at just wanting a rough idea, just us wanting a rough idea of what is going on. If you notice from here, we have been in a bearish order flow market. It has been downtrending from there ever since we changed character here, right? It has been in a downtrending market, as you can see, as we were breaking all these swing lows were being broken, all these swing lows. So the breaking of those swing lows, you know that so long swing lows are being broken, it means we are still in a downtrend. So in this case now, this was the high. This was we can say lower low, lower high here, lower low here, lower high there, lower low there, lower high there. Then if we zoom in, lower high here, lower low here, lower low here. So now we broke this previous lower high, right? And the break of that previous lower high, this is what we now said. After this has happened, it means that we now have a change of character to the upside, meaning the opposite of what has been happening all this while is what we are now expecting to start happening from here, going all the way up. What was happening here after this change of character here? All this what was happening whereby we're establishing lower lows, lower highs, lower lows, lower highs, lower lows, lower high. This is what we are now expecting here in this case. So what we now need to do now is identify our major zones. So we might not draw major zones at the top there because those are far, 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 far. The only major zones that we might want just right now. For example, in this case, this is our higher high, right? Because it's higher than this high, right? So once we now have a higher than this, we now have we now need a higher low. Where is our higher low? Our higher low in this case, it's this one here. It's that one there. Why is that one a higher low? Because it managed to break this internal structure here. So we now have a higher low. Once we now have a higher low, we expect the market to give us a higher high. So obviously our higher high, we expect it maybe, if it doesn't happen on this supply here, we can also consider to look for it either on that other supply at the top there. So this one is the first target that we are looking forward to right now, because remember what we said in the class, that once we now have a higher low, once we now have a higher high, market must drop. Once we now have a higher low, market must go up. So right now, we are simply expecting the market to come and break this previous high and give us a higher high around this supply zone, right? So that's the lookout right now. So now all you need now is to identify properly the correct entry point. So this can be your first target. This previous high can be your first target for the buys that you are going to take after we've done and finished the analysis. So that's the zone there, that's the supply zone there that I'm anticipating price to push all the way into once we have identified an entry point. So that's the zone there. So there are so many other entry criteria that you can also add to this particular trade. For example, you can add trend lines. It's fine. There's nothing wrong with that. You can add a trend line down to the downside here. For example, to the downside there, we have a zone where I'm expecting the market to tap onto. That is a zone where I'm actually expecting beautiful buys to be taken from there. Why there? Because there's a lot of liquidity that is lying below these equal lows here. So it will come, tap, then go all the way, break this high, and come all the way to the upside like this. So this is the expectation. So this is the analysis now according to the daily time frame. So according to the daily time frame, we have quite a number of details. We have quite a number of details now, details that we can actually use even on a lower time frame. So going down to 4 hour, all we now need to do is to identify what is really going on the 4 hour. Is it going to push down to this zone now? So this zone, if you check, it's also in confluence with this trend line that I placed. So if you remember, and if you've been following us for quite a while now, you discover that we actually spoke about even these buys here, these buys from here to the upside there. We spoke about them when this market was still up here. We spoke about those buys before they even happened. It was like this after this change of character. After this change of character, we realize that this is now our new higher low according to the higher time frame structure. Once you now have a higher low, after a change of character, we always expect the market to come back and tap into any untapped demand zones there, which was here. So it came all the way, tapped into the zone. So this was a beautiful buying opportunity that one could have bought and held all the way up until the market broke structure to the upside. Where did it break structure? This is the break of structure here. So the break of structure, after a break of structure, we also expect the same thing that happened after a change of character. After change of character, we expected the market to drop and tap into any untapped demand before a continuation. So after a break of structure as well. So what is now happening is what we call order flow. That is what we call bullish order flow. Bullish order flow is simply the creation of higher highs and higher lows. This one, it's internal structure now. This one, remember, it's our higher low according to the overall external structure. This is the higher low, this is the higher high, right? Then whatever is happening inside here is what we call internal structure. Internal structure now, we now need to label our internal structure. Let's mark our internal structure and see. So this was the previous high. Let me mark it in a different color. Okay, like this. Right. So that was the high, higher high, and higher high. That was a low, higher low. And now what do we want? We want a higher low. And I'm expecting it to happen around that region. So this is bullish order flow. This is bullish order flow. What is happening now on volatility 75 is what we call bullish order flow. Bullish order flow is when the market is going up, it's uptrending, and it's creating your higher highs and higher lows. So this is a zone that I'm expecting to be tapped. There's quite a number of confluences that is there. We have a trend line, we have a demand zone, trend line, demand, and also the order flow is bullish. Those are now three. If you add a Fibonacci retracement, you realize that it's also at a key Fibonacci retracement 78.6. Already, those are four major confluences that you're having supporting that buy position that you're going to take on that zone. So all those confluences are what give are what we always need to see before taking any trade. We always need to have quite a number of confluences before we jump into any trade. So here there are quite a number of confluences already. That is a trade that one can actually prepare for. You enter there, you enter here, actually. Here, your stop loss below. Obviously, you can enter on a lower time frame. Your first target is this one, all right? Your next target is that external structure, a higher high there. So this with the minimum lot size, just to help those who are trading small accounts. This with the minimum lot size, if you take this position exactly as I have placed it like this, putting the stop loss where I've placed and the target where I've placed with a minimum lot size, one position with a minimum lot size, you are risking $6 to make $116. with a minimum lot size, just one position. So this is just in reference to those who are trading small accounts who might maybe need a rough idea of how they can also take advantage of the opportunity. So even someone with a $10 account can even take this take this opportunity and even hold all the way to the upside. Someone with a $20, $50, and whatever small account that you can refer to as a small account, you can actually take this position nicely and we hold all the way to the upside like that. So this is bullish order flow that is now happening. So now what we just want to see is to see the market coming down, which is why now we are waiting for an opportunity. The opportunity that we are going to take for this market coming down, it's an opportunity as well, even though that's not our major opportunity. Our major opportunity is this buy, right? So the sell that we're going to take from wherever we're going to identify the entry up until we come into the region here. It's just I can say it's a minor opportunity. It's not the major opportunity. The major opportunity is this one. When we're in a bullish order flow market, the major opportunity are your buys. Your major opportunities are your buys. So after you've done your analysis on the 4 hour like this, and you now have zones and you now have everything is clear. You now know the order flow. You now know the region where you're expecting the market to come into. Once you've done all that on a 4 hour, going down to lower time frames like your 1 hour, 30 minutes, all you're now doing there is to identify now this opportunity. For example, in this case, we want the market to go down, right? So meaning we need a sell entry. We need a sell entry point, a sell entry point. And in this case, I identified the the first sell entry point. We actually gave it in the signal group. I think it was last week. Last week we actually gave a pending order. It was around this region here, around that region. We gave a pending order. So after we gave that pending order, if you check, it was actually triggered. The pending order was around just below here. The stop loss was above. So right now, everyone who actually took that trade right now, they are in profit of sales, right? So all we now need to identify now is to see where the market is going to break out. You can as well add other confluences like your trend lines. You can add a trend line. Let's put it like this. You can add a trend line. Have a trend line like that, and another trend line to the upside like this, right? So already I have a channel, right? This is a channel that I've drawn like this. So in this case now, remember our first entries, we entered there, right? Those were actually pending orders. They were actually triggered there. So where is our other entry points that we can identify? Remember, we always expect these unmitigated or these untapped supplies. Why does the market prefer to sell in those supplies and to buy in demand zones? Why? It's because in between, the market will be generating what we call liquidity. Liquidity, these are simply stop losses of retail traders that they put either on support and resistance levels, either on trend lines or wherever. So in between here, let's identify liquidity. Liquidity here, we can see that there's liquidity here. These are equal highs. Equal highs, it means if ever retail traders they were selling there, their stop losses are just lying above those equal highs, right? So already that's liquidity. Liquidity, it's actually, if ever you are in the class, you are aware that liquidity is fuel. It's fuel that the institutions want and always need before they go where they must go. For example, in this case, they must come down, right? But before they come down, they can't just come down without taking out liquidity, right? So they'll come and take out that liquidity. They'll come, take out that liquidity. Then you find them dropping, right? That is the expectation now. That is the expectation. So if ever someone's going to sell again, for example, the first sales were there, the second sales, I'm also expecting them on that same similar position there. Same similar position there. Stop loss just above like this. Stop loss just above. And where is your target? Your target is simply this demand that we're expecting to start buying. Right. This is the other trade that you can even put a pending order just below there with your stop loss above, right? So this is the current trades that I'm looking forward to on volatility 75. These are the current opportunities. This is a minor opportunity. This one is the major opportunity. So if ever you catch both of them, that would be wonderful. That would be wonderful if you manage to catch both of them, especially the major opportunity. Don't miss especially the major opportunity, which is the one that is in line with the order flow. So that is it, and that is what we're looking at for on volatility 75. Anyone with a question before we move to something else? Anyone with a question there? Anyone with a question? Anyone with a question? Anyone with a question? Or it's clear? Is it clear? Are we together? Are we together, gentlemen? Ladies and gentlemen, are we together?
Yes.
Wonderful, wonderful, wonderful. So whatever is happening in between here, we don't expect anyone to take trades in between here. Either you take trades at the top of the range, which is at the top of the channel, or at the bottom after the breakout of the bottom. Those are the only two entry points that we expect one to be taking. In between here, you are simply what can I say? You're simply involving yourself in unnecessary fluctuations. Because if you check in between here, the way it's fluctuating is so serious. So serious. Consolidation, consolidation, broke out, consolidation, consolidation, consolidation. So we're expecting all this liquidity and all this liquidity to be taken out before we go down. So that is an entry. Where is the other entry after the breakout of the channel? Down here. First entry, second entry here, right? Then the third entry is the major opportunity, which is a buy there. So these are the opportunities that we're looking forward to on volatility 75. So let's go and look at boom 500, boom 500. So boom 500 is actually almost approaching our major zone on the daily. Right, it's almost approaching our major zone on the daily. Remember that when we have a major zone on our higher time frames, which is on our daily, when we have a major zone, that major zone, it's actually your where you're supposed to be taking. When you take trades from major zones, right? The probability of those trades winning is higher than someone who is taking trades where there is no higher time frame major zone. So if ever you take, let's say, a buy or a sell on 15-minute or 30-minute, and yet on the daily or 4 hour, there is no major zone on that zone that you're taking those trades, the probability of that trade winning is very low than when you take positions or trades on a zone, on a major zone, right? So we just want to look at what is going on boom 500 so that at least everyone has an idea of what is going on. So this one, we spoke about it yesterday. We have a trend line and we are in a bearish order flow. Bearish order flow. This is whereby the laws, swing laws are being broken. Swing laws are being broken. Right. So in this case, this was a swing, lower low, lower high. This one is our lower low because it broke this internal structure. So now we have a lower low. We now need a scenario like what happened on VIX, whereby we went on to create a lower high. So here we need a lower high, right? A lower high, a high that is lower than this one. So if you put our Fibonacci from the top to the downside, that's the first hint. Top to the downside, we can see that where we have a trend line, we have also a supply zone there, which is our first zone of interest or our first point of interest. So that one now, that is the zone that we expect the market to start reversing. If it was going to give any form of reversal, we expect it to happen there on that zone. It just in case it's going to reverse, then continue going up. continuing going up, maybe it will be wanting to go to the next point of interest, which is around 78.6. So before it just goes straight there, we can have a situation like this. It falling down, it can fall into this demand, then go, if ever it wants to go down from that region, to simply come down like this, then go all the way down, right? But if it wants to continue all the way there, it will simply pull back, continue, then drop. So these are the two scenarios that I'm currently looking forward to, and I'm currently watching out for on Boom 500. So here, this is the major zone on the daily. Once you have identified the major zone on the daily, we have a major zone, we have a trend line, and you also have 61.8 Fibonacci retracement, right? Those are three confluences already. So the other confluence that you now need is an entry confluence, which you're only going to find on lower time frames like your 30-minute, 15-minute. So when you get those entry confirmations, while the market is in a major daily major zone, the probability of those setups that you would have found on a lower time frame, the probability of them winning is higher because we've tapped into a higher time frame major zone or higher time frame point of interest. So once we tap into there, all we just need is confirmation on lower time frames to enter. Then once we enter, we are targeting this demand. We can hold those cells all the way. That can actually last for 4 to 5 days, depending on the momentum, 3, 4, 5 days, depending on the momentum coming down. So that can actually be a very good swing trade from there to this first zone. Once it comes there, we just need to look at the reaction. Is it going to bounce back up? If it bounces back up, it's fine. We would have made money with the sales already. So this will be first target. If it breaks there, it's coming all the way to this one. So those will be these are the zones that we are now looking forward to. These are the zones that we are focused on right now. These are the zones that we are focused on. So going down to 4 hour and even the lower time frames, we are simply going down there to identify as the market tapped into the zone. Not yet. It hasn't tapped here. If you notice, this is 4 hour. It hasn't tapped into this one. So the supply here, according to 4 hour, is this one. That one. So we are just almost 1 or 2 candles away from that supply. So this is what I want to see. This is what I want to see now. Once we tap into that supply, once we tap into this supply, right? Once we tap into that supply, someone can just enter random just like that, just by it tapping into the supply and rejecting. Someone can just sell and wait for it to drop, right? There's nothing wrong with that, but so long you know that your equity is bigger enough to hold all those drawdowns, especially on higher time frames. But what I want to see now on a lower time frame in this region, once we tap into this region, what I want to see, especially on 30 minutes, right? Remember, as it was going up, it was following bullish order flow. Going up, I'm referring from here to wherever it's going. Bullish order flow, right? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So now, after we break like that, we now have a higher high. This is our higher low. Once this higher low is broken like this, that's a change of character. Change of character, it means momentum is no longer to the upside. Right now, in this case, it's now to the downside. Once we have a change of character, we expect a pullback and a continuation. So someone who is not well versed can simply tell you that I'm expecting you to tap there, reject, then I'll enter. There's nothing wrong. There's nothing wrong with that, even though your information is not quite as deep as what we might be expecting on our side. So basically, this is what I want to see on this region. Once the market comes into this, you want to see this. Once this happens, it means your sell is going to be upon the pullback. This pullback after the change of character, that's where your sell is going to be. So this can also be seen as a trend line breakout and retest. That's also another extra confluence, basically. So this is what I'm looking forward to once we've tapped into this region. So That is it for Boom 500. Nothing much, nothing much, nothing less, nothing much, nothing less. That's just we just need to wait now. We just need to wait for the market to tap into that zone. Anyone with a question on Boom? Anyone with a question? Anyone with a question, or it's clear? Anyone with a question, or it's solid and it's clear? Are we together? Are we together, gentlemen?
Yes, yes, clear, clear, clear.
Okay. So that is the expectation now. So that's the trade that we are looking forward to alongside with those um volatility 75 sales that we're expecting, obviously. So those are the current setups that we're looking forward to, and we're expecting to make a good money out of these setups. We're expecting to make good money out of. So in this case now, according to this 4 hour, once it goes there, the higher low for the 4 hour will be this one. The higher low will be this one. So this higher low expected to be broken on the 4 hour. Once you see this higher low, 4 hour higher low being broken, it means that we are now, it can break like that, give a pull back into the trend line as well as into any supply that is not tested before. Once you see this higher low being broken at 4 hour, that's a confirmation that we are now going down. We are now going down to this first region, second region there. So this is the expectation. It's just a matter of practicing patience. It's just a matter of practicing patience. Is that higher low? I think it's the same with 1 hour. I think it's the same higher low with 1 hour. Yeah, it is the same. It is the same. So that's a higher low that even let's say the market comes here and does those entry criteria that I spoke about, and it comes all the way down here and fails to break here. You can as well close those sales that you might have taken, because if it fails to break here, you can simply play around, or even break here and go up, because the order flow, the internal order flow will still be bullish if it fails to break that higher low. So you just need to be careful on that one. Once you get those sales here, you just need to make sure that it comes and breaks this level. Once it fails to break here, you can simply close those cells up until if it breaks here, you simply wait for a pull back into any supply order block or fair value gap, and then you enter your sell positions. So that is the expectation. That is what we're looking forward to. It's just a matter of people being patient and waiting for the right moment to actually arrive. So VIX, I said you can as well put pending orders, sell pending orders there, the top there on volatility 75. You can put pending orders, sales there, as well as pending orders, buys there at the bottom where we marked those zones that we marked on the chart. So guys, I think we are done. I think we are done. Those that we need to revise, I think I've recorded this video. You can as well go and revise and watch again and again and again. Because one thing that I need to explain is that most of the information, most of the concepts, you might not understand them all in one sitting. Repetition is what is going to help you, because these concepts, they are deep than what you might think. They are deep than what you might think. So if you just take it lightly, you might think that you've understood, yet you haven't understood. So that is why repetition, you keeping on repeating the concepts, it will help you way much better. So those that are in the class, they are aware that once the market does everything that we spoke about, they can actually start to enter the trades without even waiting for a signal, because obviously the knowledge that you have been giving them in the classes more than enough for them to actually start making money on their own without reliance on signals. So that is just the advantage of being in the class. You are equipped enough to an extent whereby you can now stand on your own, take trades on your own without waiting for a signal. So guys, that is it. That is it. That is it. We are done. We are done. I guess we'll see each other tomorrow in tomorrow's session. I guess we'll see each other in tomorrow's session and see what the market would have done and see what the market would have done based on what we spoke about. So I think we are done, guys. I think we are done now. We are done. Right. It's okay, Saki. It's okay. It's okay. It's okay. It's okay.
Thank you.
Wonderful.